While everyone is panicking and the markets are down across the board, you can set yourself up for more wealth than you ever imagined if you prepare yourself early enough. This recession will be unlike any other. I'll show you exactly how to take advantage of this opportunity to join the millionaires and even billionaires that this recession will create. Whether you have a net worth of $1 million or not, there's an opportunity that if you capitalize on it correctly, will set you up to multiply your wealth. Still, there's something different about this recession that makes it unlike any other, which is critical to understand. Most people won't even talk about this or understand its implications, but I'm going to cover what a recession is and who succeeds during one. The word recession alone conjures up images of people losing their jobs and homes, the stock market crashing, and general misery. So who profits during a recession, and how is it even possible to thrive in such an environment? Simply put, a recession is the transition of an economy from one that is booming with high consumer spending to one that is contracting, with people and businesses cutting back on expenses and deleveraging. As living costs such as rent, food, and energy rise, you have less money to spend on everything else. This psychological phenomenon can be described as the negative wealth effect taking hold. People may feel poorer as the worth of their homes and portfolios drop. While this is true in terms of their wealth, their actual cash flow is not even at risk, yet people pull back on spending and try to save more. That's why it's extremely critical to safeguarding a good form of cash flow, because that's what's going to keep you safe. You must do everything within your power to continue living without having to touch your portfolio or investments. It's much easier to deal with the storm if you don't have to dip into your assets while they're losing value, especially if they're not extremely liquid assets like real estate. Now keep this in mind because we'll return to this crucial point later in the video. How does the overall situation compare to yours? First, how do we know if a recession is coming or if we are already in one? The recession is defined, among other things, as 2 consecutive quarters of negative growth with a 0.6% drop, following the 1.6% drop in Q2 data released in July. Technically, we are already in a recession since Q1. Many CEOs believe we are currently in a recession or will be shortly. So why aren't we preparing like the executives and business leaders? Let's say you don't have any money right now. How can you best prepare or take advantage of the situation to save more money? Pull some extra shifts each month to increase your income or move in with a housemate. But I'm not here to repeat the generic advice you've probably heard before. This video isn't about saving money, it's about how to become wealthy. Of course, to build wealth, you will need to save more, but more importantly, you will need to increase your earning potential. The most important thing is what you do with that money. So with that in mind, what have people done in the past to build wealth during recessions? Historically, however, a surprising number of successful businesses were launched during a recession. Consider Uber and Airbnb. Both companies were launched during the last recession in 2008 or 2009. Go back a little further and you'll find plenty more examples. Apple, Slack, WhatsApp, Pinterest, General Motors, IBM, Groupon, Instagram, and many more were launched during economic recessions. Whatever the sector, history demonstrates that adverse market conditions are not a barrier to innovation. Even Disney was launched in 1929, the year of the Great Depression. A recession is precisely a rebalancing of wealth and effective. Over-leveraged businesses and ideas will be strung out and shaken up by up-and-comers taking their place. The faster you can execute, the faster you can start generating cash flow. So I don't mean immediately go out and try to build a business with a high startup cost like a physical product business or software company. Unless, of course, you have the capital to bootstrap that and get it up and running as fast as possible. But I'm talking about service-based or digital businesses that often require little to no startup costs. You can literally do it from whatever device you're watching this video on right now. If you have access to the internet, you have no excuse. I've often heard people complaining that they just don't have any skills or knowledge, but I truly think that's not a valid excuse. If you've made it to this video, it means you're literate and capable. You just lack execution skills, so the next thing to do is to act. Just do it. You might say starting a cash flow business is the only way to beat the market and build wealth during a recession. A recession is an excellent time to launch that business because there is little competition, and customers are constantly looking for alternatives. You're perfectly poised to capitalize on the market gap as long as you're prepared to make the most of it. While others are cutting back and closing their doors, it's the season for you to go full steam ahead and expand. So how do you invest during a recession? Among the four most efficient ways to accumulate wealth during a recession is to carefully rebalance a strategic portfolio, especially if you have already got a stash of money set aside. While we're still within the initial stages of the recession, there are some critical factors to keep an eye on for an inversion. A number of these, like the unemployment rate, companies' cash available, and inflation, will inherit play as the recession evolves. When inflation returns to 2% and regulates, or when unemployment begins to fall as companies' cash reserves are depleted, you start to see it level off and ultimately increase. These are all signs of an economic inversion, of a recession leveling off and therefore the bulls returning to town. Recession gives you a better risk-to-reward ratio than just buying blindly as the market rises to new highs. Now let's revisit our favorite asset class, crypto and NFTs, and how will they fare during a downturn like this? Some projects, of course, will have their best run during this session, and I see this as a perfect opportunity to get into promising long-term projects as we see new multi-year lows, not just yet, but they're coming up. Timing and allocation will be key here, as we all know how quickly projects can push back up to new highs with a bit of momentum and a bit of positive sentiment. Once this recession nears its end, we're going to see the money flooding back into crypto and NFT projects as people race to get back in on the next cycle, which is why I've said you need to be early. It's so simple. All you've got to do is just periodically invest and hold on. Wait for 3 to 5 years and add an extra zero to your net worth. And in an attempt to add an extra zero to your net worth, what business do you have to start? What business are you able to start right now that is cash flowing and will make you a lot of money? Dollar cost averaging is the absolute best place to do it. FTX is one of the simplest options. Now here's a key insight, and this is often where a lot of people go wrong. What they are doing is they deploy too much of their cash reserves, and when the markets keep taking place, or if they keep going down and they don't come up, in the time they eventually need to sell their position at a loss or capitulate, which is a big mistake that you do not want to do. There's a famous saying that goes, the markets can stay irrational longer than you can stay solvent, or something along those lines, and that's very true. Therefore, the key insight here, the golden nugget here, is to only invest a small percent at a time. I'm talking 3 to 8% or 5 to 10%, and only do it once a month so that you're building up income. Again, by the top of the month, you'll deploy some of those reserves, so you never really have to dip back into your investment because you're making more than you're spending rights. It'll probably be a good idea to start dollar cost averaging into the markets. Personally, I've already started this month because there have been huge corrections in crypto. You should essentially start in a couple of months or maybe early next year and plan to dollar cost average for the next 2 to 3 years. Now, if you examine the charts, approximately every few years, the crypto market features a massive bull run, and it always finishes up being much higher than where it left off. So currently, Ethereum, which won't be at an all-time high, is back in. Ethereum won't be like $30. So as you'll see, it goes up plenty, it crashes plenty, and then it kind of finds a new price that does not go below. So this happens time and time again. And I know it will happen again now when the recession is over. But eventually it'll all be over, the planet will start to rebloom, new businesses will come up, markets will hit all-time highs again, and we'll see another crypto bear run now. When that happens, considering you had been dollar cost averaging for the last 2 years, then you would need to search for the top altcoins you see on the internet. And before anything ever goes crazy, you need to invest a couple of $100 into the altcoins. Keep in mind, this is 2 to 3 years after you've been dollar cost averaging into Ethereum. Do all of this relative to the capital that you simply have. Don't invest all of your net worth. You possibly also need to start picking higher risk stuff at this time. It's entirely possible and certain that some of these high risk altcoins will blow up. Whether or not you just bet on one of them, you'll make all that cash back plus more. Why invest in crypto now? It's abundantly clear that during periods of slowing economic growth, cryptocurrencies are not spared. They're often hit the hardest. When recession fears arise, it isn't uncommon for cryptocurrencies to lose 3/4 of their value during these times. But amid these periods, there is a silver lining. Given the outcome of things, as explained, it is safe to say that a crash will occur. The question is when. A crash may happen next month, next year, or in 10 years. Unfortunately, we have no way of knowing. As previously mentioned, making headway toward your financial objectives is hampered by holding on to cash or another asset that significantly underperforms either inflation or the market. Every 4 years, the market goes through bull and bear cycles. We think it might be different this time, but apparently it's not. This is Bitcoin's 4th cycle. In 2012, prices dropped by around 90%, and then in 2015 and 2019, it dropped by over 80%. We are currently a 70% drawdown from the all-time high price in this cycle. So for Bitcoin, this is business as usual. Investing at the bottom of these cycles in 2015 and 2018 would have resulted in massive profits. Because Bitcoin accounts for a sizable portion of the crypto market cap, we will use it as a proxy to assess the potential opportunity in 2023. In contrast, bull market startups typically see their valuations rise quickly, allowing them to expand operations at a similar rate. When a market downturn occurs, these are the companies that must resort to extreme measures such as mass layoffs or seeking bailouts. If you invested $1,000 in Bitcoin when it hit a low in mid-2015, that $1,000 would have been worth more than $80,000 by 2017. Let's say you bought the bottom of the 2018 crypto winter. That $1,000 would have been worth nearly $20,000 if you had held on until Bitcoin hit a new all-time high in 2021. As long as there is fear of a recession, crypto will struggle to make significant gains. Investors who are willing to take advantage of these low prices to lower their cost basis could position themselves for gains similar to those seen during the 2017 and 2021 bull runs. No one can predict when economic sentiment will shift, so no one should try to time the market. But when macroeconomic conditions improve, we can expect cryptocurrencies to recover in the same way that the economy has in the past. If you believe in the long-term value of cryptos and their importance in a decentralized future of communication, transaction, and interaction socially, then you know this is an opportunity that you just can't continue to sit on and ignore. The economic situation is not ideal, but history has shown that bear markets can also be bull markets. Crypto, as an industry, is still in its early stages, and there is a lot of value to be captured. I'm convinced that those who make it through these trying times will be stronger than ever. So I say you invest because you might just be the next big thing. How are you strategizing your big move after watching this video? Let me know in the comments below. I'll catch you guys next time.